Good morning, everyone, and welcome to the Quantum Leap morning broadcast. This is our morning leap session. My name is Doug McKay. I'm the founder of Quantum Leap Futures. This is a subscription room. If you're interested in taking a look at us, coming in for a free trial, I'll pull up the contact information in just 1 second. Each morning we get together, take a look at the market from a macro to a micro view, a structure of the market, then we drill down to the trade levels, the targets, and our hypothesis for the day. Before we get started, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. If you're interested in coming in for a free trial or joining us, send me an email at quantumleapfutures@gmail.com. There's no website. This is not a commercial venture. Or give me a call directly, 647-545-8065. Love talking about the markets. And you will need Skype, so open up a Skype account. It's free and easy to do. Send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you like this video and you want to see more of them, do a search on YouTube for Quantum Leap Futures. There's close to 300 days there. And of course, if you like what I do, please follow me on Twitter at Crazy2. All right, so yesterday, we had those two hammer days, Monday and Tuesday. And yesterday, each one of them was a neutral extreme. And yesterday, we opened up with a big gap. And our main hypothesis was a rotational day with a neutral day setting up with a move down to take out the overnight high. On Tuesday, we did not take out the high or the low, and that was a 4% probability. So yesterday, my main hypothesis was to have another neutral day. We've had 3 neutral days in a row, and the probability of the overnight high or overnight low being taken out, with the fact that the overnight high, overnight was 13 and a quarter, 2013 and a quarter, and the overnight low being 1971 and a quarter, and we opened up at the 78, 79 area. My hypothesis was to take out the overnight low and put in a neutral day. I actually thought they'd do it in reverse. I thought they'd come down and take out the overnight low and then rally and test the range high to the top and put the neutral day in this way. They actually did it the opposite. They rallied up and then came down, put neutral day, took out the overnight low, and then bounced. Two key things I talked about yesterday when we were trading. We took this Mr. Sneaky trade right here. We took this Mr. Sneaky trade right here. Mr. Sneaky is back and working really well. In fact, the low off of the Globex last night, we had Mr. Sneaky as well. Let's talk about last night. Last night we opened, and I actually took a couple longs last night thinking that we were going to get a bigger rally up. Of course, China opened up. They didn't even last, I think it was 30 minutes before the circuit breakers hit. And once that hit, I knew that we were going to be in for a wild night. Same thing we had the other night. So the key line in the sand we were talking about was 67.75 yesterday, and then the key support to hold was 41. Once we broke that 67.75, I figured that it was going to be a move down into that 44.75, possibly 41. I was surprised when we broke the 41. But I was pleasantly surprised. I actually traded all through the night, most of it. Got about 2 hours sleep. I had my single biggest day last night. I'm up over 80 points now for the night. Plus I'm long gold too, and we'll talk about that in a couple minutes. So major move down. You can see that off the bottom here, we had that Mr. Sneaky again, and that's really, they came down and challenged it again, but they did not come down and break that 31 low. and I was actually able to get part of this move on the way up. Not as much as I wanted. Um, I was looking for a move back up into 41 and possibly failure. Again, we did. We got up to 42, got back down to 31, but I had to go get some sleep. So I went back to sleep, and we actually went sideways most of the day. But we'll talk about this some more. Let's actually start our day the way that we always do, taking a look at the macro to the micro and seeing where we are within the trends. I use a 9 EMA and a 20 SMA and simple candlestick chart. I'm looking for slope and separation and where the trend is being challenged or violated. And of course, we had this wonderful couple-year rally, and then August, September, they violated it. They took it back in October, held in December, November, challenged again in December, and then we finally have broken. And we were only 3 days into the month, and we already have 112.5 points of range for the week and for the month, and that's a big move down. So the trend has been violated on the monthly. On the weekly, same thing. We were in this consolidation, and we finally violated, and we're going to, possibly get a start of a downward trend. Going to the daily, you can see that we've got this trend. I mean, we talked about this yesterday, that typically a FUBAR Mr. Sneaky Tech gap would be closed, but as I mentioned yesterday, the fact that we had news-related revaluation, two events, obviously the nuke in Korea, and then the halt in China. I don't know if they've lifted the hold on the shorts yet. Got to do some more research on that, but you had 2 nights in a row where the circuit breakers hit in China because that they were about to have the ban lifted on the shorting. So that, of course, we talked about it yesterday, revalued the market, and anytime you get revaluation based on news events, it has a tendency to throw away the chart patterns. One thing I wanted to point out as well, we've been talking about this naked cross down here at the 31 level on the daily. I said we didn't really have to worry about it because it was on a daily pattern, but just goes to show you that it's not just on the intraday patterns that we follow these naked crosses. We basically went down and closed that naked cross almost to the tick. So again, always be watching those naked crosses based on the 9 EMA and the 20 SMA. But the trend obviously is down. Now we've got a huge gap. The midpoint right now is up at 1961. I'm going to be watching that 1941 area, and if we hold the 41, I think we'll work our way up. We still have that naked Depop that has to be closed out in the RTH session at 44.75. I think they'll probably come back and test that midpoint. But with this much weakness in the market, you've got to be very know that the risk is still to the downside. Going to the 4-hour, you can see that this this downward trend. We talked about this yesterday too. The fact that we had come up and closed this technical gap, but we had failed off of the 9, and we're getting an acceleration of the trend downwards. And we've got this technical gap down here to move up to test the technical gap is showing 67.75, 67.25 area. Likely going to be more like 61 by the time we get there. The 1 hour, same thing. You had this challenge and violation, and then the news, and then the continuation, and then we had this technical gap. They've come up and closed the gap, and right now they're just trying to hold above the 9 EMA right now, trading around 48. But the trend is being challenged. You can see we're losing some slope. So we could come up. A move to the 20 is going to take us up into the 61 area. You'll notice that the 61 area is going to come popping up in all kinds of ways. The trend was down, closed it, created the technical gap, closed the tech gap, got above the 9. Now testing the 20 from above. The 9 is down at that 44. I still expect that 44.75 to be taken out sometime this morning in the RTH session. But the trend is starting to weaken to the downside, and we're getting some consolidation. As we move down to the 15, you can see now we're getting a basing pattern and a move up here. You know, no real pattern, no real trend here. We're just sort of consolidating right now, but we are above the 9 and the 20. And then on the 5-minute, you can see that, you know, we came down here, closed the tech gap, started rallying up, was starting to trend up, fell off again, and then we've come back up and we're starting an upward trend on the 5-minute. There is a naked cross down here at 42.25. Mark that down in your journal. It's likely to be challenged again today. You know, I'm expecting a bit of a bounce, like I said, but at any time we could flush. And if we get back below that 41, I'm looking for that 15 test today. So let's take a look at what it looks like on the big picture. So we had these two, we gapped down for the open of the year. We had these two hammer days. This is usually a reversal pattern, but again, anytime you get news-related events that, you know, they can revalue the market. They did that. We came down. You know, we came down. We also challenged yesterday the value area high of this next micro composite value area that we were talking about yesterday morning. And then we held the 71 area, and then we bounced and we closed at 86, you know, into the RTH close. We rallied overnight up into 92, and then we failed and came down. We're now, you know, trading down here in around this micro composite, this naked micro composite VPOC at 45.50. We've got the key line in the sand as below us is going to be 41. The key line in the sand above us is going to be 67. We've got three levels above us: 47.50, 52.25, and 62.50. Yesterday is not going to come into real play. I mean, we have right now, we closed at 86. We've got an over a 40-point gap. So I'm not anticipating that we rally up into you know, the low and get back into yesterday's range. I think that we're going to end up getting a rotational day somewhere, you know, between 41 and 67, or if we break 41, then I'm looking for a gap and go day down into the 15. My main hypothesis really all you know, centers around this 41. If we hold the 41, I think we chop around and we work our way back up into the 61, 62 area, maybe even 67. I'd be surprised if we get above 67 and rally. Now, our 20-day ATR is running at 33.35. We've obviously broken that, but if we take it off the bottom right now, the upper ATR target is 20.64.25. So that gives us the opportunity in the RTH session still to get up into this 60 area. Couple things you want to pay attention to. Obviously, we should be taking out this 44.75 probably on the open or somewhere within the first morning hour or so. If we break 41, I'd be targeting the 35.50 area first. That's the top of this range high. Obviously, the overnight low at 31. Watch this 32.75. Break 32.75. I think you got a really strong trade down into that 31 and more likely down into the 24. And again, if we don't hold 41 and we get below 32.75, then I'm looking for the bigger move down into the longer term microcomposite value area, uh, VPOC, which is down here at this 15.25. That's our next big destination. Then obviously you've got a little bit of support at 975, 905.75, and then if we don't hold, I don't think if we hold this 909.75 that we're going to even hold 1900. I don't think 1900 is going to be a major psychological barrier. I think you'll probably dip down into the 93.50 and possibly come down and test the lower part of this, the lower value area of this micro composite. You can see that this micro composite overlaps this one right here. So you might want to go back, and take a look at the June and July area of your charts and take a look at the levels here. It's pretty blunt down here in both instances, and there's a lot of, as I said yesterday, there's a lot of undetermined fair value in this area, in this distribution zone between 41 and 09. So key level today is going to be 41. Let's take a look at the overnight. I'm really going to focus more today on the overnight profile versus the RTH. So I'm actually going to be trading using this chart, but I'm going to mark up the levels on this chart, on the regular chart, but I'm probably going to keep this chart up because we want to pay attention to where the volume nodes came in overnight, and I don't get that on my other chart, but I will mark them there. So obviously the overnight low, 31. Overnight high all the way up at 92. And this is going to be another circumstance of we got 96% probability taking over out the overnight high or overnight low. Very rare, only 4%. We did get a 4% the other day. We didn't yesterday. What's the likelihood that they're not going to take out the overnight low and test this overnight low? My key line in the sand, major key support level is going to be this 41. We've got this volume cluster. Our VPOC overnight is 39.50, but it could shift again back up to 44.50. So we'll have to keep an eye on that, but I'll mark it here at 39.50. Good target. If it doesn't shift and we break that 41, it's a good target to take. And then we've got this three distribution zones. Actually, there's more than three, but three important distribution zones. One of them being right here on the bottom. That's the biggest one where we found support. The top of that is 48, where we're challenging right now. So I'm going to be using that as a trade area. I'm actually going to use the 50 level. You can use the start of it. It's kind of a little zone right here, and then the VWAP is up here at 51.75. So I'm going to move this down to 51.75. Probably even going to go up and test this even before the RTH open. Then below that, we've got the 47.25. And then obviously the 44.75, which I expect to be taken out, and then our key support line. I'm going to do the upward moves first. Once you're above that, you've got the 51.52. I'm going to change that from a target I'm actually going to use that as a trade area as well, because if we get above the overnight VWAP, I'm looking at a possibility of a move up into this 55. And then the next distribution area or low volume node overnight is right here between 59 and 61. 61 is the midpoint. So I'm going to use 59.75 because if we get above 59.75, I think they'll go for the 61. I'm going to move the 62.50 down to 61 now. And then above that, you've got 64 and 65. I'm going to use 64. Now, our weekly ATR target to the downside off of the 2043.50 was 66. It's no longer really that important. I'm going to leave it there just as reference point, but we've had range extension. The daily upside ATR target is the 64.25. That's why I put the target. I'm just front running that ATR, but I'll change that to denote it. So we'll edit this. And I'm not going to bother with a down target because we've already blown through it. So it's not really going to be a reference point for me. And then, of course, if we get up here and we accept the 64 and we get above the 67.50, 67.75, we get ourselves into a trend day back up. Obviously, we're going to watch how they handle the range low. And then above that, I'd be targeting the 74.50 area where that naked VPOC was. And then trade area will be right at the IB low. And another one at the 80. Don't need that there anymore. And then, of course, if we get back inside of value, I'd be targeting 83 and obviously the 85 level. And if we hold there, 80% destination trade and a gap close at was close 86. I'm just doing this quickly because I don't anticipate a move back up here. I put overnight low instead of overnight high at 92. And then, of course, if we have left the overnight low alone and we get into a trend day, there's a possibility we do take out the overnight high and then 95.50 range high, and then all our targets remain the same above that, so we don't have to even talk about it. We do have, I said yesterday, even with this move down, I don't think that we're done with the 2000s. There's still a lot to do up there. I don't think we're going to get there today. But we've got some, naked VPOCs, naked closes up there, and some naked crosses. All right, to the downside. Below 41, look for that 39.50 to be tested, especially if they don't shift the VPOC, the Globex VPOC in the next 15 minutes. And then the big target below, the main target below right now is going to be that 35.25. I'm actually going to front run it at the HVN at 36.50, but look for this gap to be closed out and a move down to test the 32.75 CLVN and take out the overnight low. Below the overnight low, it's all going to be about this 24. You can use this 27.25 as a first target to fund, but below 31, I'm not even looking for a place to bounce. I'm looking for a move down to 24 as that first possibility. Little support coming in, possibly at the 22.75, but below that, I'm really looking for the move down into this 15. You've got intermediate targets at 20. Trade area at 1750, but it's going to be about this 15 and holding this 975. Below 975, what was it? It was 905.75. And again, I don't think it's going to be 19, but it's a psychological number and centennial number, so we'll use it. But the next big one is going to be that 93.50. And then below that, 91 is a trade area. And then the next big area down here is at 86.75 and 81, and then 70. And it gets thin down here. We're gonna have to bring in some older volume. My composite goes back to 2013, but probably if we get back into the 1800s, I'm gonna have to take it back to probably a little bit further, to probably like 08 again, as same as I'm using for my gold. So right now, taking a look at the Keltner, our center line is at 44.50, so right there at the naked VPOC. Below that, look for them to come down into the 38.75. The overnight VPOC is right there at 39.50 and possibly break. If we hold a move to the upper, Keltner right now is going to take us into that 49.50 area, 49.75, 50. I'm going to move this to 50. And then, of course, we've got that 51.25 as the overnight VWAP, but I'm looking at the 52 level. Quick look at gold. So my main hypothesis is a test of 41, take out of the 44. If it doesn't hold, a move down to take out the overnight low and chop around. If 41 holds, I'm looking for chop with a slow grind up towards the 61, maybe up into the 64, 67 area. Anything above 67, I'm looking to test the range high, and inside of the range, a continuation and trend and the take back of all this mess that happened overnight and a move up into value. Gold. Well, we talked about if gold broke out of that 81 area and held, that we were looking for the 87 and 89 area. They continued and broke through it. We said if we broke out of this range that they'd likely go and test the 1100. They got in the 1100. I'm running long gold from 93. So we're now back into the 1100s. If the 1100s hold, okay, you know that my 2016 target is still up here. This is the composite for going all the way back to 2008, and the most traded price is still up here at 1250. So I'm looking for a slow grind up in 2016. I'm hoping that the 1100 holds now. If the 1100s holds, I'm looking for a move today back up into the 1106 and a test of the overnight high at 05. And I'll be looking for my next add-on long in gold at 1112. My stop rate now is at 98. So just to lock in, $500 on my trade and on my run I should say, and hopefully it holds. And this is a start of a longer swing trade. And there's a lot of undetermined fair value and a lot of repair work to do in gold. And we can do a closer analysis of where all the levels are. But just quickly, you've got the next key level right now is the 11, 12, 70. Above that, look for the 13, 14 area to be tested with continuation to 18. Then 22, 26, and 29. And then this is a thin area up here. I think we're going to chop her once we get up above the 12, 14 area. I think we're going to chop in between this 1150 and the 1112 area for probably a good chunk going forward, probably maybe even a month or so, that we're going to chop around in this area as we repair this. We went through it way too quickly on the way down, so they're going to work their way and determine fair value in this area. This is a breakout now, and we're broken out of the microcomposite. This is a breakout day for me. So I will be looking at where they find value and accept value above, and then we'll determine where that is, and that's going to be a key reference point above this range, just as we talked about where they accepted value just before breakout. That happened right here. Just put this in so you've got it. So just before the breakout was the 1078 area, and then now they made the breakout. We've got to look at where they accept value higher, because that'll be a reference point. Even if we come back, we make a move up, we're likely to come back down to that reference point. You guys know what I'm looking at. I don't have to get into it too deeply. All right, we've got 8 minutes to go. We're trading 48 and a quarter. Now we're going to get a big tick down, a big gap down on all our internals. So tick gaps and stuff like that aren't going to mean a whole bunch right off the bat. Play the levels and what you're seeing on the dome, rather than trying. I'm not going to try to take a tick gap, because we could open up at minus 1,000 and stay there for quite a few minutes into the open. So I'm going to be very patient on the open. I really don't have to trade today, so I'm going to be very, very selective in my trades. I got a ton of Theo, but I'm not going to get into the habit of using that. And but we'll try to get something going and trade well, trade safe, and we'll catch you on the flip side.